So the business plan consists, there are a couple of value levers that we saw that we could pull. So the lot infill was one, so 20 vacant lots infill over the course of a 3-year period, which we think is sort of dragging our feet, but we like to be unreasonably negative on our projections, right? So if it's a low hurdle, we like jumping over 1-foot hurdles instead of 10-foot hurdles. Under market rents. So we saw about a gap of, $15-20 a month on the lot rents that we thought we could very easily push. We validated that by running some test ads in the market. And so we had some reasonable assurance that we could achieve those rents.
Is 15 to $20, is that a big, like, loss to lease? Is that a big amount in mobile home parks, or is that?
It's not huge, but keep in mind, right, that may not be meaningful at all in the apartment space, but apartment rents are quite a bit higher, right? So 10 to $15 on let's say in a 1,000 average apartment rent is, not that meaningful. But the average lot rent across the country is somewhere around $300.
Okay.
So $10 to $15 of a much lower number is much more meaningful on a percentage basis. So we were looking at, 10 to 15%, 10 to 20% gap in where we were relative to market in what we thought is an escalating market. So not a huge opportunity on the rent bump, but material and a core component of our business plan. We also saw bloated expenses. So the owner of this particular park had owned it for quite a while, and it had just consistently deteriorated over time. We saw that in the financials. We also saw it when we were boots on the ground doing diligence and talking to the manager, and it's right across the street from the fire department. So we talked to them. So we were able to validate that, hey, this park has sort of been neglected over the past couple of years, and, we don't know what's going on, and it's just sort of run into disrepair. So just introducing some professional management, not only from a cost perspective, but just paying an attention and doing things and taking care of deferred maintenance. That was another major lever as well. The last thing was this, and this is the thing that at one point repelled us and triggered us to run away from it, but at the same time was the reason for a lot of the value that we saw, and that was a contaminated water well. So there was an issue with the infrastructure, so the private utilities, and such that the water levels were not up to the code of the state. And so that killed the interest of a lot of prospective buyers. But the more we dug into that, the more that we could get comfortable, and we're able to use that as a problem that scared a lot of others away, and we used it as a negotiating tactic to get a price that was appealing and attractive to us.